Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about my dividend investment strategy. I felt like I should make this video because I felt like when I first started my dividend portfolio and I didn't really know what dividend stocks to put in, I didn't know how to find stocks, and so I've kind of developed this little strategy that I feel like you guys can get some value out of. Now before we jump into the episode, right now we're doing an AirPods giveaway, so it's super simple on how you guys can get a free AirPod. Now all you guys have to do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. 3 steps to get a free AirPods. Alright, now let's jump into the episode. I hope you guys enjoy it, and overall, I hope you guys learned something. Roll the intro. Let's go. Bam! Alright, the very first thing that you guys need to understand is what are dividends. Because when I first started, I didn't really understand what they were. I just kind of knew that companies just paid people for owning their stock. Well, imagine this. When a company makes so much money, they pay their investors. That's pretty much all it is. It's not really too complicated. It's very basic. And the way I think of all my investment strategies and everything like that is trying to keep it as simple as possible. So as long as I know that, you want a company that makes a lot of money, that's great. Now when you guys are picking a stock, what do you guys look for? We're going to be breaking down how to scan for stocks later in the episode, but what are some brief things that you guys need to know before you guys pick a stock? The very first thing is if you're building a dividend portfolio, you want to make sure that they have reliable dividend history, because history tends to repeat itself, especially in the stock market. So I always like to look for 10 plus years of consistent dividend payouts. Now, obviously a nice little perk would be for it to be increasing over those 10 years. So if let's say they pay 25 cents, then 35, then 45, then 50, they're increasing their dividend payouts, which is very good. So now when you guys are holding that stock, you can, 1, count on, that consistent payout, 2, and slowly it's going to increase over the course of owning the shares. Now the next thing I like to think of is, will the company be relevant in the next 10 years, 20 years, 30 years, 40 years? You want to make sure that you guys are going to be investing in companies that are strong enough to make it through some of the toughest times that we've ever seen. Now obviously that's why I like to really focus on blue chip stocks. These are pretty much companies that are worth billions of dollars, and they have always paid their dividends. They have a lot of cash and they make a lot of money. Some examples of blue chip companies are like Apple, Coke, GM, a variety of other ones. Companies that are worth hundreds of billions of dollars. Now the next thing that you guys need to understand is, when should you buy your stock? Well, this is a rule that I always kind of had. I have really 3 main rules. The very first one is, it's better to be in the market than out of it. You're going to miss out on a lot of gains if you're always trying to time the market. So it's honestly better to just be in the market than trying to time it or just trying to figure out the best time. Overall, guys, just try to get in as early as possible. It's better to have, 1 share of a company that you believe in than, that $100 sitting in cash in your bank account. 1, you're going to be getting consistent payouts. 2, you're going to be getting the principal of the asset going up in value. Rule number 2, using the RSI indicator. So really this is the relative strength index. So I always like to make sure that the relative strength indicator is under a 45. This means it's not overbought. So this is pretty much a good time to buy. Obviously, if you can get it under 20, that is one of the best times you can actually purchase this stock, is when the RSI is under 20. But overall, if it's under 45, you're still in the game and you're still making money. Now, rule 3, this one's always a nice little perk. I don't always look for it, but if the stock's on a support line, so this is just previous times that the stock has bounced from a certain price point or moving average line. So obviously during this time, you will always make a lot more money in the long run. But if you're building a dividend portfolio, this isn't a major rule that you guys need to have, because you're mostly going for those dividend payouts. So that's really all you have to be worried about. Now step 5 is really sitting back and letting those dividends roll in. Now the next thing we got to do is go ahead and turn to the computer so we can look at how to scan stocks, how to find stocks, and overall how to make the most money as possible. Alrighty guys, so we are up and loaded here. We are on marketbeat.com/dividend/screeners. So there's going to be a link down below, so you guys can just go ahead and click on that. But Here's how you guys find your dividend stocks. It's very simple. So as you guys see this little screener here, all you have to do is go in and fill in information that you guys see value in. I'm going to be going ahead and showing you guys mine so you guys can go ahead and look at it. So looking at the first scanner here, market cap. So really what this is how big do you want your company? So really with the larger market cap is the less risky stock in most scenarios. So less risky, more risky, more risky, more risky, more risky, more risky. And then this is the riskiest stock that you pretty much can get is a nano cap. So now dividend yield. I like to just have any dividend, so I like to look at them all. But if let's say you want over 10%, which is going to be a very, very risky stock to own, if you guys just want 1%, you can go ahead and actually click which dividend yield you guys want. I like to just go ahead and look at any so I can look at all of them. Now the next thing is you want the market cap ascending. So this just means the market cap is going up in value. So now you guys can go ahead and move on to the sector, payout ratio, and then buy. I like to just go ahead. I don't really mess with these. I only really like to mess with 3-year average dividend growth, and then I like to just put any growth just because 3 years is kind of a short amount of time, and if any growth in a dividend payout is pretty great. Now this is that consecutive years of dividend growth. Just like we talked about, I like to have it at least 10 years, and obviously 15-20 years is better because those stocks have seen more recessions, and they know how to get through those hard times. But still, 10 years, at least 10 years is fantastic. So now this next one's up to you. If you guys like a monthly dividend, I prefer quarterly just because they do pay out a little better. Now, obviously, you can still go ahead and click monthly, and then you can just search if you guys want to have just a monthly payout, which is still amazing. We're going to go ahead and show you guys both so you guys can see. And then the 52-week range. So what this means is it's within 40% of the 52-week low, pretty much. So you don't have to do that. You can just leave it. But really, the main one on here, guys, is this one right here, the consecutive dividend growth, and then the dividend yield, and then the 3-year average dividend growth, and then the market cap ascending, so it's going up in value. So now let's leave it on monthly and search for companies so you guys can see. No, thank you. And so now, okay, we have the Realty Income Corp. I do own a couple shares of this, so this is fantastic. Now let's go ahead and look at quarterly. I guarantee there's going to be a lot more dividend stocks on the quarterly because it's a lot easier for companies to actually pay out quarterly. So let's go ahead and search, and there we go. So now we got a whole bunch of companies. Now we can go ahead and actually click on them and look at pretty much everything, guys. And we can go to dividends, advanced chart. So if we want to make sure it's still going up in value, we do have this nice little fall here from the coronavirus. But let's go ahead and change this to the 1 month so we can see, okay, 2008 fall, slowly going up in value. And then this is fantastic. So it's like buying this stock all the way back in 2013. So just by looking at a quick search, you can get a expert opinion on your dividend stock. So it's pretty amazing. So we can just go back, and obviously they show you all the information, the dividend yield, the annual dividend, dividend growth. So 11% over the 3 years. That's honestly amazing. Now they do have pretty much everything. The earnings. You want to make sure that the company is actually a viable company. You don't want it to be like a crappy company. So the actual revenue is a lot. $195 million. So obviously this stock might be a nice little stock to own. Nice little dividend. You get the asset of the stock going up. The only downside to this website is they do always have some pop-ups. I do have a pop-up blocker on, but it still goes up. It's just anytime you really click a button, it pops up. So and the cool thing is, let's say if you guys just want to look at Apple, so you can go AAPL. And there it is, and they show you everything that you can possibly ask for. The dividend, they have the earnings, they have the financials, they have everything on this. So you guys can literally have it, and you guys can sign up with it with their website, marketbeat.com. It's pretty great, guys. It's pretty great. Alrighty, guys, that is it. I hope you guys enjoyed the episode, and overall, I hope you guys learned something. All those links are going to be down below, and then you guys can sign up with M1 Finance and get $10 completely free for investing, and you guys can pick the stocks that you guys want to buy. So you can buy like shares of Apple, Amazon, Ford, whatever stock you guys want to have. All that will be down below. Remember to always stay happy, stay positive, and I hope you guys have a great rest of your day. Take care, and overall, stay safe out there. We'll see you guys tomorrow. Take care. Peace. Bam!